Greetings to fellow traders. Firstly, I would like to thank you for coming into this room again. I think, coming to end of the week, I presume everyone is tired and probably, some of you may be busy really watching the market because yesterday the market really had a good move, right? Anyway, as we go on to the session, we will discuss more about this. Okay, for those of you who are coming first time to our session, okay, please take note that this is going to be our system is a unique way of approaching the market, and basically what you have to do is I'm sure being a trader you do have your own way of approaching the market, but like as I've been doing it for many years, this is one way how we look at the market, basically by taking trading on a specific levels or trade zones. That's what we are going to discuss today. Please take note of the risk disclosure. This is going to be purely education for those of you who are new or first time coming to our room. What I would suggest is probably you may want to test it out, on a demo account to see for yourself, to learn how to use the system with ease. At the same time, how easy it can be, when you trade, especially when you do your work before you decide on the entry levels. As I always keep saying, our system, what we do is, basically we'll tell our clients to predetermine the entry, exit, stop loss, and especially, if you're day traders or scalpers, you need to know the validity or expiry of the trade. And do take note, we focus all in all about 36 crosses. Okay, we provide services to all the 36 crosses. The crosses are like Euro, Pound, Yen, Swiss, Aussie, Canadian, Kiwi, Sing dollars, and any one of this cross against each other. So basically, when you trade crosses, it's also, it's best, sometimes, before you initiate a trade, you ask yourself, what are the things to be done? That means you have to pre-plan, what happens, if the trade goes with you and if the trade goes against you. At least you do some work before you initiate the trade. At least it becomes less emotional. At the same time, you can look at the market with ease, especially when you know, okay, this is where we expect the market to reverse, and if the market did respond to that level, then your confidence level would be also at the peak. So that is one way which we look at the market. Later on, I'll be sharing with you one example. Then, we look at the market, probably, we discuss the market together. Do take note that the theory behind our approach to the market, we use a price level principle, or we call it PLP in short. Basically, what it means is we trade on specific price levels rather than trading or hitting the market most of the time, unless we do it at the market, provided if our system says like probably you should have been long or you should have been a short, whatever is it, then probably have left it, then it's up to you to decide. But most of the times what we do, the reason why we do that is because we predetermine our risk before we initiate the trade. So basically, how we do that, I'm going to show you one example. And by the way, is there anyone who are coming first time to this room? For those of you who are coming first time, you may be a bit confused, especially, when you look at, because it's like when you look at our system, basically it's only got a set of numbers together with trend direction, right? So, and basically what we teach our clients is, we tell all our clients to always take or initiate trade looking at the trend, and we should always keep or stick to the trend at all times. So when we do, of course, when we determine the trend directions, then we decide whether to be a buyer or seller. And of course, when we decide on whether to be a buyer or seller, then we have to also define the risk, of the trade. Sometimes it is good to see the risk of the trade because, sometimes, a trade may not be a good trade. So that would put you off in most of the time, especially when the market is caught in a range or when the market is trading in a range, So that also gives you an additional way, our system tells us, whether we should be in the trade or whether, we should not be trading or whether should we be uh, holding on to the trade, all this stuff. And I know the system works quite well or works very well with, especially, if the market is in a trending mode. Of course, sometimes, when the market is in a range trading, it's difficult to trade, but you can still use the system to define, whether the market is in a range or in a trending mode. And do take note that the levels, the levels or zones which I'm going to share with you later on is derived by using Fibonacci and the switchbox, moving averages, trend channels, Gann numbers, and Elliott wave. Basically, what we do is, we do the work for the traders, meaning in the sense, being a technical trader or technical analyst, I've been in the business since 1995, and basically, when you do or when you look at the market, when you believe in, like, for example, let's say, you believe in moving average, especially when the moving average, when the price reaches moving average, like, for example, like maybe, it's the 89 moving average or 200 moving averages. See, there will be a group, you must understand that the way the market moves is basically, moves from supply and demand. So basically what I'm trying to tell you is, different groups following different tools may determine the market movement. So one way we can determine, like, for example, when the market touches the 200 moving averages and started to rise or bounce, so that the group that is following the 200 moving average are controlling the market at that time, and these are the groups they are using it. So we can also determine how far it can move, based, especially if you are able to identify the group that is controlling the market at that particular point. So let me change the screen. Just give me 1 minute. So let's, before we show you the example, okay, is the best is always look at the economic indicators that has been out, or the calendar, when we look at it. And in fact, coming to last trading day of the week, okay, we do have a couple of data that is important announcement that is out. Germany, we have about 12 GMT, we have a consumer price index. Then from the US, we have about GDP, and we also are getting Reuters Michigan Consumer Sentiment Index, So these are the data that has been out. So being a scalper, especially if you're a scalper, okay, do take note that it is quite dangerous or quite risky, to trade, especially when there is an announcement, unless, if you are, if you put your stop loss quite wide or pretty, you practice putting a big stop loss, then it's advisable trade. But other than that, if you think that if you practice putting like 20, 30 pips stop loss, then it's best for you to just stay silent until, the announcement is over. Then probably after that, then you can initiate a trade. So having that in mind, okay, what I'm going to do is I'm just going to share with you one example or one way. And in fact, did anyone manage to get the move yesterday? Did anyone in this room, manage to catch the move or were in the trade yesterday? In fact, yesterday we had a good move, and that move, which we did predict that move, but unfortunately, we missed out, meaning in the sense, because we missed out by 10 pips, I think, if I'm not mistaken. It's about 10 pips, we missed that entry point on most of the trades. But other than that, that move was expected, and and for those of you who feel that you have missed it, okay, there's the only thing I can tell you is at least like keep trying is one thing, and also you must know where you went wrong, so the next time when the move happens, at least try to be in the trade, or stay in the trade. Okay, now what our system does is, okay, we have an alert. Okay, basically whenever there is an alert, okay, what the system is telling us is we should be doing something, okay, but it doesn't tell us whether to be a buyer or seller. In fact, I'm still have not finished. In fact, I'm still working on the strategies. Probably next month onwards, we would be changing our topic. Probably we want to discuss on the strategy, rather than just the low zone level. So what we'll be doing is, we will be showing you how or what kind of strategy to be used, so that you can trade or take the trade with ease, right? But let me show you this example. So what we do is, the moment once we get an alert, okay, what our system tells us is, you got an alert, do something, but it doesn't tell us whether to be a buyer or seller. So it takes is about, I would say, if you have been using it, less than 5 minutes. If you're new, then probably it might take you about 10 to 15 minutes to decide on what to do for today, or what to do for now, then whether to be a buyer or seller, so on and so forth. So what we do is, let's look at one example. Okay, right now we get an alert on CAD, dollar CAD. Okay, let's look at the majors and minors first, and then if you have a time, then we'll look at the crosses. Okay, dollar CAD, it says support zone 1 at 100.70. Okay, basically what it's telling us is the market is moving down, right? Do something. That's what it's telling, right? Then after that, what you have to do is, we have to go back and just do some work to find an answer whether to be a buyer or seller. Okay, after we get an alert, what we do is we look at the strongest and weakest barometer, right? This is a tool whereby we use to decide whether that alert is being supported, or whether that alert supports the strength or the weakness of the market. So if you look at on the daily, in fact, today our Aussie has been the strongest cross, followed by the Kiwi dollar, and the weakest is being the Sing dollar, followed by the US dollar. Okay, just give me 1 minute. Can't see the camera. Give me 1 minute. Okay, so I hope you can see it, right? Yeah. So if you look at it, so you can choose the time belt, you want to stay, meaning in the sense, if you feel that if you're a scalper, you can look at the lower time frame. If you're a day trader, then probably you can use slightly, on the daily time frame to see whether, it's like it supports, right? How about the others? Can you all see? Let me scroll down. Can you all see that? Yeah. Okay. So here, if you look at it, and this is a 6-hour time belt which we normally use, and so when we use this, basically we decide to see, that means we do our work to see that's how long do we want to hold the trade. So on this scenario, since the dollar can, that means the Canadian dollar is being strong, we should see 1 or 2 on the Canadian dollars, which it did not support on this scenario, meaning in the sense, even though the price breaks the low, but the strength is not supporting this. In fact, if you look at this right now, Euro has been the strongest. In fact, Kiwi is also one of the strongest. So maybe what we will do is we'll look at Euro, then we'll decide how to trade on this. Let's see whether we get an alert for Euro. Did you get? In fact, we got an alert early in the morning, So let's see. Okay, basically, what we do is, we look at the chart. Let me show you the zones. Then we will decide what can I do, for this. Give me 1 minute. Okay. So euro, when you look at euro, in fact, the hourly trend, basically it says sideways up. Basically we are a buyer. We want to go long on this cross. So of course, looking at this, of course, we have like two types of entries. In fact, for beginners, basically, you buy at the low. In fact, I would say a couple of strategies which I will be sharing with you later on. But for a start, I just want to make it simple, just based on this report, where do we decide and how we decide to take an entry, right? So we have either, we have like two types of entries. Basically, either you buy at the low or you buy on breakout, looking at the report, right? And the same thing, meaning in the sense, if you're for euro on this scenario, the least risk would be buying at the low. Basically, we look at the support zone 1 and support zone 2. Okay, this is a clear indication. Usually, most of the time, you see the day low is happening, or the session low would happen above support zone 2. In other words, that means the higher it is, the low from the support zone 2, the stronger is the market, So basically, I look to long near this level. That's where it's going to be the least risk. If let's say the price breaks below this, then of course the next least risk entry would be near the hourly level, which is 12115, right? So these are the two types of safest entry which I look to go for a long. And of course, if I'm lucky, if I get it, then I will take it. Otherwise, then we have to wait for the next entry. The next entry would be the breakout trade, which we call it the second time break of resistance zone 1 and resistance zone 2. In fact, right now the market is trading at resistance zone 2, okay, which is 1, 2, 3 figure level. So basically what our system tells is, if you have a second time break, that means first time when you see the price hitting this level, usually we get a consolidation, or we may get a pullback of about at least about 30 to 40 pips. Either you get a consolidation or we get a pullback. And do take note that whatever the levels or zones which I'm sharing with you, please apply a variance of between 3 to 5 pips, because different brokerage will charge you a different spread. So sometimes it's unbelievable, meaning in the sense the market will turn precisely at that level. Then if you do not do some allowance, then you may have a problem, like you get stopped out and the market reverses, or your profit may not be booked because like you put it precisely. This kind of issues may rise. So now coming back to this, so if for today's trade, basically I would look to a long if I get at this price, meaning in the sense near 12220 or 122 figure, or the second time break of 123 figure, which is right now is trading there. Later on, not to worry, we go and look at the chart, then we decide together, then we see where do we put our stop, where do we book our profit. So let's say I'm going to long at 123 figure, So where do I put my stop, or where is my safest place to put my stop? See, I look for prominent levels, and what I do is, I put between 3 to 5 pips below the prominent levels. So when you look at this, the prominent levels would be, like we have a Europe support zone 1, which is 12255, and we have a US. This is by the way, this is a US report. We have 2 reports a day. One is updated during Asian session, and the other one is updated during US session, right? So we have a next prominent level, which is 122.20. So it all depends on what kind of trader I call myself. If I call myself a conservative trader, then probably I would want to be quite stingy on my stop loss. And if I call myself an aggressive trader, meaning I do not want to get stopped out, then probably I would be a bit generous on my stop loss. So looking at this, if I'm going to take a trade break of 123, the second time break of this level, right? I would put my stop 5 pips below 12250. If I'm really stingy, then probably I may want to put my stop below 12280, which is about 12275. So in other words, I can put my stop at 12275, 12250, or 12215, depending on what kind of trader I call myself and what kind of trader I belong to, right? And on the other hand, where do I book my profit? If let's say I get my price triggered at this level, okay, I do have the next prominent level. Usually we focus our entry exit, basically, for strong turn or strong reverse. We pay attention to zone 1, zone 2, zone 4, and zone 5. These are the 4 levels we would pay attention. But of course, zone 3 and the zone 6, all these are minor levels. That means, in the event I miss that entry, then probably I may want to use that level for entry or partial booking of the profit. But other than that, I use this zone 4, zone 5 as a prominent levels. And of course, we do have a target levels. These are the levels whereby we can also use it to book your profit, depending on what kind of trader you belong to, right? So now my entry is, since it's trading about this level, okay, I would want to do, either I would want to buy the second time break of this level, and I would want to book my profit at 12360 or 12385 below. That means probably 12380 or 12355. And I should ask myself whether does the risk reward justify the trade. And we also have a target 123 level, which is 12395, 12460, depending on what kind. I think we have one more level, 12335, right? Depending on what kind of trader you belong to, then you can decide where do you want to exit. So I just repeat, I'm going to put my stop below 12250 or 12215 or even 12275, depending on what kind of trader I belong to. At the same time, where do I book my profit? 12335, that is, if you really call yourself a scalper, or 12355 or 12380. These are the levels where I plan to book my profit. Now, what we will do is, let's go and look at the chart and see how is the market. Then I will decide whether, where is it advisable or where is it safer to enter, exit and stop loss. Remember, we are just like a weatherman giving you a weather forecast. It's up to you to decide to see, whether, when we give a call, it's going to rain, then it is also, you, on your part, you do have to do your own analysis to see whether what we are saying is true. That is one way of having a safer trade or a safer entry. All right. So let me change the screen. Oh, yeah. Okay. This is the euro. So let me run from a week. You see, this is one way I look at it. I zoom in from a higher time frame to lower time frame to see whether my view is supporting or whether is it justifying. So if I look at a weekly, in fact, the market is trading near the high, and if I see a weekly high, it has already registered 12330. Okay, but of course I do not know whether it was today or yesterday, or that is, we have to zoom in to go and see that. And if I look at the previous week high, which is 12324, and the one more week, that is also 12335. That means 1, 2, 3, 30, 35, there is a very strong resistance, and once it cracks that level, we expect the bulls to come in aggressively, then probably, it may accelerate, right? Now, let's say we look at on the daily, okay? In fact, if I look at the daily, I can see that yesterday was the recorded high for this week. Then, of course, the previous week was on the 19th, right? So, in other words, earlier on, I looked at the report. I said that, I would want to go long at the second time break of 1, 2, 3 figure, right? So, I think if you look at it, straight away, we know that 1, 2, 3, 30 is going to be a immediate barrier for the bulls, 1, 2, 3, 30 and 1, 2, 3, 35. So, that note, okay, if I'm going to go and buy or long at 1, 2, 3, let's say 1, 2, 3, 0, 5, do you think it's advisable to hold for the price to break 1, 2, 3, 35? How many of you think that the price can go above 1, 2, 3, 35? I mean, having done this work, or having looked at the chart, how many of you feel that there is a very high probability that the price is going to break that 1, 2, 3, 35? Can you quickly give me an answer so at least I know you're with me, So for those of you who feel that, again, what I'm saying is, when you do some work, your confidence level, the reason why I'm showing you this example is, your confidence level would be there, okay, I'm expecting a break. So then at least, you have to watch the market to see whether the market is having a break or, is struggling. So on that note, you can decide whether to book your profit or whether to hold on to your trade. Now, if you look at a 6-hour chart, okay, when I look at a 6-hour chart, again, if you look at the moving averages, see, there is a 89 moving average, which is where the price is struggling now, See, what I'm trying to explain or what I'm trying to show you is, we have done the work for you, if you have a clear picture or bigger picture, okay, this is what I'm expecting it to happen. And when you do your own analysis, whatever analysis you may be doing, all this while or all these years, whatever, then if your analysis also supports the same as what we are saying, then definitely your confidence level would be at the peak. I hope you all agree with me. If you think, anyone doesn't agree, please let me know, so at least we can discuss on that, right? So now, our system says, I'm going to go along the second time break of 1, 2, 3 figure, and I decided that I may decide to book my profit at 1, 2, 3, 35, 1, 2, 3, 55, and 1, 2, 3, 80. All right. Okay. Now, if I look at a 6-hour chart, okay, 6-hour chart is trading, and of course, if you have I have another 3.5 hours left, and trust me, once the bulls are able to crack this level, which is 1, 2, 3, 30 or 1, 2, 3, 35 level, when we do that, you can expect the bulls accelerating, meaning in the sense, getting a spike or, getting a lot of stops triggered, So that is one way we can analyze and study the market. Now, let me zoom in lower to see. See, the reason why I'm showing you this is, this is where we look at to see how is the candle. If you look at this, okay, now I'm showing you a 2-hour candle. Okay, this 2-hour candle is got another, I would say another half an hour, another 28 minutes left on this, right? So now, right now the price is trading below the open. Okay, basically what the market is telling me is I can have a good entry point, because right now this time belt, see, remember the early on the 6-hour time belt is trading well above the open. Okay, that means The open was 122.50 and right now it's trading at 122.87, which is about 37 pips higher. So now if I look at a 2 hour, it's having a pullback. So that would give me a better entry point because, I can get it cheap, compared to the previous candle, right? So now let's say we look at a 15-minute or 5-minute. This is where I decide on my entry, and this is how I predetermine to see where, whether is it safe to enter a buy or safe to wait for better opportunities. All right. So if I look at a 15-minute, okay, the 15-minute is telling me that, okay, I got a high probability that this high would break, So basically, there is a high probability this guy will break, but of course, it doesn't tell me how far it's going to go. That's where we have our levels. Early on I said, if it breaks, then I look for 123.55 and 123.80. These are the two levels whereby I would like to book my profit, or this is where I plan to book my profit. So what I'm going to do now is, okay, depending on what kind of trader you belong to or what kind of trader you call yourself, there's two things I can do. I can look to wait, because this is a range trading. Okay, this is I wait for a breakout trade. Okay, let me highlight those levels. Then it will be much easier for you. Remember the 122.55. Remember I said there is one support at that, and 122.20 is my another support, and on the high side is 123.35, 123.55. See, when I plot all this, things becomes crystal clear for me, So when I look at this, okay, I know the market is having a pullback. So what I'm doing is, even if I plan to go for a trade now, at least I know I should have my stop below this level. So at least I know that I'm protected and I'm still in the business, right? So what I want to do, or what I may want to do, is these two aspects. Let me give a trade setup based on this. One is, it's a breakout trade. Remember, it's a second time break. Okay, in fact, I would be comfortable to see to break this, once it breaks this level, probably it may go high, but of course we have another level which was yesterday's high. So I think it will be best, we stick to that 1, 2, 3. 1, 2, 3, 35 or 37, breakout, and probably I would want to put my stop below. In fact, 122.80 is advisable, to if you really want to be safe. But of course, this is a breakout trade. You have to be very careful on this. If you think you want to put a very tight stop, then probably you can put about below that 1, 2, 3 figure. And I would want to exit, definitely want to exit. That means this gives me a risk reward of only 1:1. Okay, I would ask myself whether I would want to enter this trade. Otherwise, if I call myself a conservative trader, I can also do a limit buy. Okay, maybe near 122.55. If you think that we want to have a less risk with a good risk reward ratio, of course the 122.20 would be safer, but we still have that. Remember I said there's 122.55 is Europe support zone 1, right? So if I put a stop of 40, which justifies my trade, then probably I may want to exit before the zone 1 or zone 2, which is 122.95. So if I do 95, then this is again I get about 40 pips. So in other words, I can call myself. That means what I do is, whichever type of traders you belong to, if you feel that if you are prepared to take the breakout trade, you can go for the first one. If you feel that, I'm not comfortable on that trade, then, maybe I feel I want to go for a conservative trade, then probably I'll go for the second one. But whichever way, you can determine or you can decide whether your trade would be going smoothly, and you can definitely control your emotions, because you predetermine this is what you're going to be a loss, this is what you're going to get when you do. And the biggest advantage of this system, or the way which we look at the market, is we trade at the market, meaning in the sense, we follow the market. In other words, like this right now, the market is trading at this level, and this is what we decide to do at this point. So when we do this, we are always following the market closely, and as a result, your risk reward justifies, and you would be able to do it, profitable in the long run. Right? Okay. Now let me answer the questions. Then probably if we have we can decide on this. In fact, we have been developed the system. We have been testing it, and more or less, we have fine-tuned, and we are ready. In fact, this is the product is about more than 10 years of research, that it's been done and improved, and we have been sharing with clients, right? Okay. Now, any other questions or any other doubts, on the examples I shared, please, I'll be very glad to answer the questions, right? Okay, let me see. What period moving average are you using? Okay, I hope that's the question. Okay, that's the first question. Okay, basically, I'm a very firm believer of Fibonacci, and if you see most of the numbers, okay, I can show you how most of the moving averages I use all Fibonacci numbers. If you see this, I use 21, 199, and this is 144 is a different number, 55, and of course this can be 40 or 34, and this is 89, and this is the 100, which also plays a significant role, right? So most of the numbers I use are Fibonacci and Gann related numbers, because I firmly believe in Fibonacci and Gann numbers, right? Candle close, what time frame on break? Okay, basically, if you look at this system or the way which we look at the market, okay, this is, trust me, this is the emotion-free trading way of approaching the market. Because see, the reason why I'm saying this is because you already predetermine your losses, you already predetermine your profits, because that would also help you to put a stop on your greed. Because on this example, I was saying that I would want to exit at 12355 or 12380, so that means I'm already determining, and depending on what kind of trader you call yourself or what kind of trader you belong to, that dictates your holding period and your price target. So if you think, if you want to wait, and always remember that when price against time intercepts, okay, when price level and time intercepts, change is imminent or change is expected, and then that's the way, you look at the market with ease, right? Okay, why looking at 2 hour and 6 hour? Any special reason? In fact, I do not use 1 hour. In fact, I feel that 1 hour is a bit too short, especially for forex market, because if you look at forex, see, the way the forex market behaves is, like you have a good move, then the market consolidates, then you have the next good move or big move, then it consolidates, and that's how the market moves. So especially if you use 1 hour, okay, I feel that you would not be able to get a good breakout. Sometimes, like the 1 hour looks like it may have a break, then it become a false break, then it falls back into the range trading again. So that is one of the reasons why I use 2 hours and 6 hours. 6 hours is basically why I believe in 6 hours, is because I design, meaning in the sense that I've divided into four parts, for that 24 hours market. So that's the reason why I use 6 hours. What is the best entry level as of now for euro? Okay, in fact, if you ask me, euro, we should have, in fact, today's morning report, we gave a call level to go long at, can't remember whether it's 55. Let me show you that. Let me show you this. I can't remember. I think this morning we gave a call to go long euro. Yeah. In fact, no. I think I don't know. I mean, if you use a 5 pips variance, you should have got it. In fact, we gave a call level at long near 122.40. In fact, today's low was 122.41. So if you use between 3 to 5 pips variance, you should have got that move. But on the other hand, see, because sometimes, like when we predict or when we forecast, it's very difficult to give one levels precisely, because that's where we give two levels. So if either that level doesn't happen, then you look for the next level. Right? So let me see. How about Aussie US? Okay, now any questions or anything you want to discuss? Probably any crosses you want to discuss. In fact, we had a good call on this euro as well. In fact, we also have a weekly call. So our weekly call was also pretty good. So while we are waiting, any crosses you want to discuss or any. Let me show you what was our weekly call while we are waiting for. Just one last. Yeah, in fact, we gave a call on 22nd July, which was last week, and we. Can't remember where was this. So we were expecting the euro to cross, reverse somewhere bottom near 120.75 or 120 figure, So I think the market went to around 40 or 45. I can't remember, And of course, this is a weekly, and of course we do have daily calls, So if you've been following that, then that would give you a clear indication, when you follow this daily time frame. We always remember that, predicting long term and predicting the near term, there's a lot of difference, So the accuracy of the near term would be far much more greater, So that is where you have to keep regularly following the market and keeping update yourself. Okay, Aussie yen. Okay, let me look at Aussie yen. Aussie yen. Okay, if you look at Aussie yen, in fact, we feel that there is still got one more push higher. In fact, if you look at on the weekly, and in fact today's closing is very important, because coming to the last trading day of the week, and if you see there's something like a spike, during the beginning of the week it went down. Now it's trying to close above the open, and the closing price is very important. And if you look at on the daily also, it is in the congestion zone, meaning in the sense there's a lot of moving averages having a big uh, um, range. The bulls may struggle to clear that, but once they clear that barrier, then we should be able to see, or we should be able to have a smooth flow. So if you look at on the 6-hour chart, we still feel that the price may break high, but again, the price should clear, or the bulls should crack that 81.90, 82.15, and of course 82.35. These are the two levels. I would want to closely pay attention. I would see whether the bulls are able to crack that level, and once they clear that, then we should be able to see the price accelerating higher. And we are still bullish, and at least we should be able to see the Aussie yen testing 81.90, 95. That means 81, 82 level. Okay, let's see what is the report is saying. Just one quick. So if you see, if you look at our report, in fact, I look at 82. I told you 82 level. I see 82.35, if I'm not mistaken. Yeah, 82.35. So we have a huge barrier, at once it breaks 81.80, 82.25, 82.40, until 40.45 level, we should be able to see a huge barrier, But once it clears that, then the bulls should be able to. So if you ask me my opinion on this, what I should be seeing is, I should be able to see the market hitting 81.95, slightly below 82. Then we should get a pullback towards 81.50. Then we should see the next move up, So this is what I expect the market to move, right? Based on the levels and based on the zones. Okay, the platform wise, basically, our company name is Precise Trader, precisetrader.com. We give free access, 1 week access. What I would suggest is probably you may want to come and try for yourself to see, how convincing is it for you, how easy is it to use. Then you can decide on your own to see whether is it effective using the system, right? The next is, yesterday 200 pip move was purely news driven. So do you think the price will reverse and continue the bearish trend? Okay, in fact, euro, what we felt, I'll show you the chart. In fact, we felt that it has already reversed, okay, meaning in the sense, in the near term, okay. Long term, we still have, we have not seen the low yet. Okay, let me see. Yeah. Okay, if you look at what we feel is, you should see the price moving towards 124.40, or even about 12, if I'm not mistaken, I think I remember it's about 125.50. 124.40, 125.50. We should be able to see on this move. Then only we can see a reverse, happening. So again, this is purely, this is a correction. This is not the major low or major bottom is not seen yet. So we will wait for more clues from the market to see where is it heading, whether is it, and you have to play. See, you have to play the game. Especially based on your analysis and your expectations, and that makes things easier. Right? Okay, on the weekly, there is a huge congestion moving average. What will happen next week? See, next week, as I told you, it all depends on today's closing price. If the market is able to close above that 123.30, or as long as because the 121.45, 121.65 is a critical level for the bulls. So if as long as if they are able to protect that level, we should see testing highs, that is the near term. In the long term, we are still bearish, we still feel that the worst is still not seen yet. So, so this is just a pullback or correction which we are getting. So we'll wait for the market to give us an answer. All right. Okay, then Aussie yen. What do you mean Aussie yen? Aussie yen, if you ask, again, we are in the congestion and we feel that. See, if you notice, it is in right now is in a congestion here, right? And we have also the previous congestion somewhere here, So basically, once it breaks, you should test this congestion high, So then only we would know. But overall, is we still we wouldn't know until it clears out of this congestion. Usually, you see, whenever the market moves into congestion, it's a difficult time to predict the market or moves. This basically is just like a drunk man, So you wouldn't know which way it's heading. So basically, you have to wait for the market to give us. But of course, we can work on the probability, which is got a more higher probability, whether it can move higher or whether it can reverse. That we can do. But most of the time, whenever it's in the congestion, we have to wait for the market to give us an answer. Do you find DMI on your chart more useful than stochastic MACD? Okay, basically it all depends on your convenience. Okay, I believe DMI. I firmly use DMI, RSI, MACD. MACD also I do use. Stochastics I do once in a while because I feel that too noisy. But it all depends on your convenience. It's convenience of your use. So that is the thing I wish to highlight. Okay, I think we are coming towards the end of the session. All right. Once again, thank you very much for coming into this room, and I take this opportunity to thank FX Street for organizing this wonderful event, and hope to see you again next week. Next session. So till then, have a great weekend, and goodbye. Thank you.